Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, October 18th, 2014. So we're going to have the weekend edition of this video, and we are going to look at all of the indices, the indicators, our ETFs we look at, and then I've got three casino stocks we're looking at: Las Vegas Sands, MGM, and Melco Crown. Okay, the Dow was down, or was up 263 points on Friday. So used to saying down, it was up 263 points on Friday. So a heck of a rally, pretty big snapback. I do think, I am still counting this as my wave structure, that this is a fourth wave rally back. So what am I expecting? I am expecting a fifth wave back down here, and I'll show you in a minute on an hourly chart where, why I think what's going on here. But the initial target for wave 5 is I'm expecting 15,952 or 15,658. So somewhere in, this is the minimum target I'm looking at, and this is the next target I'm looking at. And of course, those bracket the previous low down here of 855, 15,855. So the assumption is that this high up here holds on Monday, 427.8, which is interesting because that is exactly, literally to the 10th of a point, 50% retracement of this wave 3. And what is this wave 3? Let me show you. When we look at from this high, that rally back high to the low here, it came right into this at 50%, and it's, my chart in terms of doing the, when I do the math, it's exactly 50%. It's not showing up visually is what I'm trying to say. So anyway, we had a 50% rally there, and wave 2 was almost exactly a 0.786 rally, another Fibonacci retracement calculation. So, I like the way this wave 3 is shaking out. I'm still thinking that we've got these waves down. Let me pull this chart in for you, and we'll take a look at this. This is the same thing. Here's from the high on the 19th, okay? Make sure I got this in the viewing range. Okay, so this is the high of September 19th, and I continue to believe that we're doing a 1, 2, 1, 2, 1, 2. And that we are now in this third little I, black little I wave structure, and we've got 1, 2, 3, 4, expecting the fifth wave back down, okay? This wave here, this strong wave 3, was almost exactly 261.8%, so it was an extended wave 3 of this wave 1, okay? You said the 0.788 we talked about is almost exactly 0.786. This is 50% at this high here at 11:30 Central Time, 12:30 Eastern Time on Friday. We'll see if we continue to get a move down to the downside. So that's what I'm expecting. And as I start to get into this move to the downside, I'll be looking at the wave structure to see, is it playing out for the target, of the two targets I just talked about. So we get this wave down, then that will complete wave 3 here, okay? And then because this was a zigzag pullback, fairly sharp pullback, I'll be expecting a flat, kind of an ABC flat formation. I was actually expecting that here because of this sharp pullback, but we didn't get it. Now, in Elliott wave, there's no rule that says these have to alternate. It's a guideline. You kind of expect them to alternate. But I noticed also in here, in this, there's a wave structure. We actually got a 1, 2, 3, 4, 5 as we completed this wave 3. When we looked at this wave 3, these two waves did not alternate. They didn't overlap. It was perfect in here, but they didn't alternate. So anyway, this is what I'm looking for. Looking for another wave down. That's my expectation. Let me put this over here. Okay. So let's move on to the S&P 500. Again, pullback rally, but we're still trading below the 233-day moving average. We have not closed back above the 10-day. Quite a bit of damage has been done. Let me look back at the Dow. Yeah, we're down. Same thing on the Dow. We're below the 233 day. We did not close back above the 10. The New York Composite, same thing. Even more so, way down below. Of course, we got this minimum double top was hit in terms of the minimum expected move. You can see how the 21 is hard down. The 55 is rounding over. The Nasdaq. It closed, although it pulled back, it closed back below the 233 day. It did not, it kind of got, almost looks like it got repelled off of the 10 day exponential. Russell 2000, a little bit stronger in here. We are getting some divergence in the Russell for this in here, and it caused this move, back up to the upside here. We did get a close above the 10 here. But then it kind of reversed. It opened up high on Friday, and then came back down and closed down here and closed below, and it was down 3.78 points for the day. So not quite sure what to make of that. I'm usually, looking for a couple of closes above the 10, and then a break of that high. And like in here, we got a couple of closes, and then we didn't get a break of those two highs of that high until over here, several days, 4 days later, and then we got a little bit of a rally. So I don't know. I'm very, very cautious about getting into buying rallies here. I just think because of the damage that's been done and because of the wave count that we're doing, I'm trying to stick with selling rallies. And see if we can't continue that mode until something dramatically changes. Until if the wave structure changes, something changes. I mean, it's not fixed in stone by any means. I mean, you can't stay married to one particular scenario if the market's telling you something's different. Okay. Now here's the Dow on a weekly basis. You can see how this pivot point right in here was substantially broken on this last week. This is a weekly chart, and we were down 163 points for the week. So this pivot was broken. We're breaking out of this ending diagonal. We still closed down. Yes, this looks like a hammer, from the LA Wave guys, but it's a dark hammer. And again, I honestly don't know, again, what the, I would have a tendency to be a little more cautious on the, on a white hammer where it closed bullishly for the week instead of the way it did here, but I'm not playing that. Let's see. Seems like there's something else I wanted to mention about it. I know we're getting across on the weekly basis, the 10 breaking below the 21 there. S&P 500 on a weekly basis, same thing. Notice how last week I talked about how we came right down to this pivot, and then we just smashed right through it. And we've also broken on the S&P. Did we do that on the Dow? I don't think I plotted it. Let me go back. Oh yeah, because of the way it's in, have I still got this? I've still got it on semi-log. So if I look at this, I look at the trend line coming off of this. This has been broken quite a while ago. You can see that. You can see that trend line of, coming up off the bottom. The S&P 500 just did that. Okay, so that's what this red line is on a weekly basis. Okay, there you go. Okay, so you can see that with this week's action, it pretty substantially broke that uptrend line that had been in since March 2009. New York Composite. Last week we had the smash below the pivot. Now we came down and kind of completed the minimum move that we were expecting on the double top. But again, this double top is indicating it's a top. Now we'll see how much of a move we get and where support comes in. We got this support here. I'm not sure the rationale for it other than there was a previous high and a low and 1 week low here, and it didn't stop this move here. So I don't know. There's a lot of stair stepping going on there. We could just be, again, like I've talked about in the post, stair stepping down. All right, let's look at the NASDAQ weekly. came back down into this area where I had some potential support targeted and rallied back up. This is the 55 week moving average. Not sure what else to say about that. I don't think it's showing me a whole lot more. Let's see the Russell 2000 on a weekly basis. Where are you? There we go. All right, so the Russell smashed down below that pivot in the top up here last week, and it's got a little bit of a snapback, this week. So not unusual to see that when I've talked about that. I talk about that on Head and Shoulders. When you break the neckline, a lot of times you'll get a pullback. So again, we're looking what I'm looking for on Monday. We'll see what kind of continuation we get. All right, that's the 5 weekly charts. Let's take a look at our short-term trading index. Had a pretty, because of the rally, we had a very low reading intraday all the way down here. Look at this, the low, 0.22. I mean, that is really, we have gotten that before, but you don't see that very often. And then we had a pretty bullish close, 0.62, but the 10-day is still sitting right here in neutral between the red and the green line. And the yellow line is just at 1.0. And honestly, I'm going to just get rid of the yellow line because these are the two that I pay attention to. The next one we're going to look at is the VIX. CBOE Market Volatility Index. And you can see we had to collapse back down because of the rally. Again, right back down to the 10, and we'll see what kind of continued trading we get. But that, man, it's a hellacious move here. And I think I showed you before, the overall picture of the kind of move that we got. Now we're back into the moves like what happened in 2011. I mean, that was pretty good selling. The interesting thing, though, is the way the VIX erupted here, and we're back to levels not seen since 2011. But the put to call ratio is not reflecting that on the equity put to call anyway. Let me just pull this over for you because I'm keeping it in a spreadsheet. Didn't mean to do that. Anyway, okay, so the put to call ratio is 0.71 on Friday. The 10-day is 0.73. So what I do is I keep a 10-day moving average of the last 10 days, and it's at 0.73. We haven't, you don't get bearishness until I start seeing, extreme bearishness. Okay, this reading over 0.9, I always start to highlight. But when I start to see a 10-day over 0.8, then I start to, it gets my attention. And I noticed that one of the guys on StockTwits that's very analytically oriented was talking about how we've had 2 days of greater than 0.85 in a row, and we hadn't seen that in a long time. But when I look back and looking for the green, which means that there's been extreme pessimism in terms of buying of puts, you got to go back, look at the 10-day, you got to go back to 2011 to see that. Okay, here's the August 2011 to see this extreme and getting the extremes up over 1 and several over 9 and get the 10-day up over 0.8. So what's interesting is we got the extreme put to call readings back in 2011 along with the VIX, but we're not getting it now. Okay, we're not getting the extreme put buying right now. So I'm not sure what to make of that, except for the fact that I'm not sure everybody has gotten as extremely pessimistic. It may be a sign that the selling really hasn't culminated yet for the move down. So anyway, that's just my thoughts on it. Don't have any scientific research behind that. All right, I think that's it for, I wanted to look at the high-low too. Okay, now the high-low, I talked about a W-type bottom. Okay, so we have gotten a W-type bottom and it bounced back up, and with Friday, we actually had 24 more new highs than new lows. So this is kind of interesting. It's not something I want to bet on. The other thing I'm going to watch for is, do I get a cross of the 10-day above the 21-day? Now, if we get that, that may be more of an indication that, something else is going on with this move and we're starting to rally for whatever reason. So, it's why you watch multiple indicators, and there's not any one that's golden. Let's take a look at the high yield bond fund real quick. And that bounced back pretty dramatically. It does look like 5 waves down here to me, but since this overlapped with 1, I don't see how this can be 4. So we may have something else going on unless this is an A, B, C, okay? Because a C wave can be a 5 wave. It's always a 5 wave too. So this is either, part of a new 3 and a deeper, or this is the end of a correction too. So I'm going to keep watching that. And let's look at the semiconductors. Semiconductors down in here, they're breaking, we got this big move down below the 233, snap back. Hasn't closed above the 10. And let's see. The next one we're going to look at is the home builders. Home builders also similar type thing, snapback rally. Now we did close above the 10 here, so this will be interesting to watch. We had this breakdown out of this channel, and now we're moving back up into that. Okay, and then the last one we take a look at is the XLF. We got the weekly in here, and I want the daily first. Okay, so the XLF, it's had a pretty good break in here this last week, and then we bounced back on Friday. But again, it's just, it bounced back slightly above the 233, but it's below the 10. We're still trading below this trend line that it broke, and on a weekly basis, the XLF has broken this trend line, and again, this is a trend line all the way back to 2009, I believe. Yeah, on a weekly basis. So very similar to the S&P 500 this week. I thought that's rather interesting that both the S&P 500 and the financial ETF related to banks, financial stocks, insurance company type of stocks, it has broken that 5-year upward trend line this week. So sign of breakdown. Okay, so that's it for the indicators. So let's take a look at our 3 stocks we've got. Las Vegas Sands. So where are you? Las Vegas Sands. The casino stocks, Las Vegas Sands announced, I think they had good earnings or something. They announced a big buyback of stock, and we got that huge move on Thursday. Friday, kind of a pullback. It does look like it's trying to bottom. A couple of things going on in here. You look at this A, B, C type mode. C does look like it's equal to A when I do the the kind of projection. Let me do that. I think I did that. If I take it the length of A, come back and do it here where I think B is ending, then you get that C is almost exactly equal to A. And you take a look at the indicators, and it's been trying to get divergence in here on the demand index, and notice how it went positive in here. The DI plus has crossed DI minus. The RSI, it broke this trend line in here, but it continued to chop sideways. But it also looks like, we've gotten divergence. I could let me draw a trend line. And, you could, do this. And you can see it's the opposite of where the pricing moves. So that's why it looks like there's strength coming into this. I'm just not ready, given the downtrend in here, I'm not ready to jump in and buy calls. We are getting the 10 crossing above the 21. What I'd want to see is, maybe a more substantial cross. We get a pullback and then a close back above it. There's another example I saw over here where we had a big complex. I think it was this. No, it wasn't this. There was another one. I think it was Melco. I'll look at that in a minute. Anyway, this is definitely worth watching. We'll see if it's starting to if it starts to get the moving averages turned on it. And then the next one is MGM, and MGM is similar type thing, but it's not nearly as strong as LVS is showing. The interesting thing with this red line, that this is a trend line from back in March 2009 too. So it broke that, and now it's just pulled back up. We are getting a couple closes here, but again, these moving averages, everything is so hard down. And the ADX is at, what is it, 27, it was 29 in here. So pretty solid downtrend. Of course, you can see that on the chart. You don't need the ADX to tell you that it's in a solid downtrend. So not nearly the position. Again, this is just one of those wait and see. It's had quite a bit of a move. I'm not going to be willing to sit here and try to buy puts on it to play it for a retest. Let's look at the indicators. We are getting some divergence. And because of that divergence, now again, divergence can continue on, but because of that, I'm not going to be buying puts, and it's not showing me enough to get me comfortable to buy calls. And so the last one we're going to take a look at today is Melco Crown. And Melco, again, this was a complex correction, a big WXY. And there's a real good chance that this may have completed its correction. Let me do the Fibonacci projections. If you come back to the beginning here of A, which is the beginning of W, go to the end of W, go back up here to the end of X, and you come down and you get 100%. So Y would be equal to W right down in here around 23, slightly below where it got. So it may have been close enough to have completed this. We'll have to watch and see. Get rid of that. Zoom back in a little bit here. Let's take a look at the indicators. We are getting some bullish divergence in here. It's definitely showing up. The indicators did not go to new lows when the price went to new lows. So I think these are trying to turn. We got a couple of days closing above the 10, but because of the solid downtrend and because of the tone of the market, I'm going to want to see the moving average cross to start getting a little more comfortable that maybe there is something. And you still got to be careful, because once this 55 breaks below the 233, you're in a downtrend, okay? And it started this definite downtrend here back in mid-June. It actually started it on a short-term basis much earlier than that, and so now the real question is, it's gotten quite a ways away from the 233 day. There's a lot of air here. I mean, there's room for rally, but I wanted to prove it to me before you do that. Now let me go back. I think this is the one I looked at. Yeah, okay, so here had another big WXY type of correction. And the point I was looking at with this is that, okay, so here's why you wait, because a lot of times that first wave can be choppy, and you're trying to figure out what is it doing, you get the moving average cross, and then it still pulls back down below that 10, and then you get a close back above it, and then once it's crossed and it's going, you got a good, a little bit better chance. So this is the kind of scenario I'd like to wait for on these casino stocks. We'll see if that happens, and that's what I'll be watching for. So. All right, that's it for today. It's a long video. We always cover a lot on the weekend because we look at the weekly charts too. So I will take, I haven't looked at all the stocks this weekend. We'll look at it, see if there's any new trade ideas for the coming week, and we'll review what we got out of this last week. So this is Joe for Beyond the Chart. If you felt the video was beneficial, please share it on social media. And if you're not a subscriber, just subscribe. You can download the free PDF of the 5 essentials I've got for you. Get access to the Trade Ideas webpage. You just need your first name and email, and you're good to go. Click on the little red box on the screen. So, all right, everyone, have a great weekend. I'll talk to you again tomorrow.